It's called trade management. It's now trade management now, whereby you now are managing your trade based on what price is doing. So right now we simply expect the rejection where price currently is going. We expect the rejection. Then once it closes below this yellow zone, we can as well sell again. That sell stop loss just above. Then first TP is this area here. So that is also something that we're still looking at for the VIX75. Otherwise, all the entries that we entered early in the morning, those ones are deep. So for VIX, that is, we just wanted rejection there. If ever you want to enter on the trend line, you just need to be wise with it now, whereby you can either use your 15-minute to enter, then make sure that your stop losses are intact. You just need to make sure that your stop losses are intact, and you wait for the rejection to happen before you. So here you can even enter, but it's wise to enter using your 15-minute or 30-minute, even 1 hour. But 1 hour, I think if it rejects, it can reject here, then close below here. So now entering there now. So it now depends now. Now depends with you how you want to go about it. Do you want to enter based on the 15? It's also okay. There's nothing wrong. There's nothing wrong with that. So there we are. There we are. So the 15 now. All we want now is for price to come and touch there, give us a rejection. Then our stop loss, even above here, it will be safe. That's $7 with the minimum lot size. So the lot size that you use, just not depends on you now. But however, it will still be a safe entry. So they're either there or below this yellow zone. It's also safe. You understand?
Yeah, because I've noticed one thing. You see these movements of VIX, how it moves. Yeah, we have to maximize the scaling.
Now you're talking now.
So that you have to chow the whole trend, you see. Chow the whole trend.
Yeah, that's true. That's true. You just need to be wise with it.
But you see what, this is an opportunity, and an opportunity doesn't come like
every time.
Like you see, so we have to maximize it, you see.
That's very true. I'm just worried.
Like when you say it makes high lows, you see like here it's making low highs. On every low high, you have to enter a trade there.
Yeah, that's true. That's true, because that's true what you're saying. That's true. So basically, it's still a downtrending market. Low high, most probably low high again there. Yeah, that's it. So you just need to be wise with it and know when to enter and how to enter. But otherwise, so far so good. You know, VIX. Stick with VIX, guys, and see. You'll see wonders here. You'll see things. You'll see things with VIX. A lot. You experience a lot of things with the VIX. VIX has little manipulation, if you ask me. I don't know, is it little manipulation, or I am now just used to knowing how it moves? I don't know about that, but VIX, it's actually, once you now know what to do, it's actually predictable. Very, very predictable, very, very predictable. There's no games or any funny tricks like like other instruments. So VIX. So now I just want to look at this VIX 100 that I never paid much attention to it. I just want to see how it went, how it moved. Okay, it went up, So I never analyzed this that much, but these entries here whereby price broke, came back to retest, even if someone had entered there, you could have obviously, but I don't advise you guys to trade VIX 100 for now because of its viciousness. VIX 100 is very, very vicious, and with how small your accounts are, this thing can actually take you out very nicely, very, very nicely, very, very nicely, easily. So no need to even look at it. No need to look at it. We'll talk about this in the near future after people's accounts are now stabilized. That's when we'll talk about that. But for now, let's talk and focus all our energies on the VIX, on the VIX, on the VIX. Let's focus on the VIX. Let's focus on the VIX and make sure that we master the VIX75. I tell you, there's a lot of money here. Even when your equity is growing, that's where you actually need to, that's where you actually start to see now that this thing is serious. Because you know, the day that your account will start being able to accommodate like the 0.005 going up there, that's where you start to see, Mr. Mike, this thing this thing is real bad. Because serious, don't rush to enter this. That one, at least be at which account size can you say it's compatible for? $500. $500? No, not $500. $1,000 is the best for using a 0.005. Is the best. So long you're still below that, so long you're still below $500, stick with your 0.001, stick with your 0.002, stick with those two, right? Then when you get to 500, that's where you can add maybe 0.003, 0.003, and maybe 0.004 as well. But those three, 0.001, 0.02, and 0.03, they'll be fine even there at $500. They'll be okay there. They'll be okay there. So for now, you stick with your what? 0.001 and your 0.002, so long you're below 500. If ever you're actually below 100, I stick with the 0.001 only. If you're below 100, stick with 0.001 only, unless you don't know how to do your things, because at the end of the day, we actually need to see you guys progressing. And unless you now know how to enter, how to apply your things very well, you can do whatever you want. But for now, that's my advice, because I know VIX sometimes can be tempting. If ever someone is not disciplined enough, it can be tempting. Find yourself entering in 0.005, yet your account does not even allow that. For example, this trade, this stop loss with the minimum lot size, it's $8, meaning with a 0.005, that's $40 there, meaning currently open profit and loss is currently $41 with the minimum lot size. With a 0.005, it will be $200 there. Just from there to where it is, it will be $200 with a 0.005. That with a $1,000 account, it's actually okay. it's actually okay, because that's actually 20% of the account, which is actually okay. So for someone below that, you don't even need to use that, because imagine, let's say you have, let's say, $100 account and you want to force a 0.005, meaning if ever you take, let's say, 2 trades of this nature, that would take 40 and 40, meaning already you are down 80. When you're down 80, you're left with 20. What is that? So you see, it's not even, you are simply over risking using a 0.005 on $100 account, or on a $200 account, or $300. Those are small, they are still small. You need to focus on 0.001, 0.002, up until you grow and grow and grow and grow. You'll be growing just like that. Yes.
Can you read again that thing? Can you read it again?
What?
This thing of the trade whereby you see the stop loss.
Or this thing. Stop. You see this first three. You see this three. This 3, 5, 6, 5. You ignore them, that one. So it's $8 here. This first three, 1, 2, 3, you ignore, then 8. Same as here, 1, 2, 3, you ignore. Current open profit from there to there is $39 with the minimum lot size. That's how you read this one for the VIX. First 3 you ignore, so that's $8 stop loss. Here, first 3 you ignore, that's $40 open profit.
Then they reach a risk reward.
Risk reward here, it's 1:20, meaning we are risking, favor we are risking 8. We're going to multiply 8 by 20, which is 160, meaning this trade all the way, if it goes all the way, it will give us a reward of close to 160. This is 1, 2, 3, you ignore 179. This is 179. So if it goes all the way, it will give 179 with a minimum lot size. That's the risk compared to reward. You are risking 8 to make 179. So the risk compared to reward is 1:20, 20.95 there. So that is how you even calculate how much you're risking. If let's say you don't have I don't know what you'll be using, but that is simply how you calculate how much you want to risk. You simply look at the figures there, put your stop loss. If you reduce here, it will be reducing, said that's $7 there, that's $9 there, that's $20 there. This is $20. This is 12. So yeah, that's it. That's how you read those things. So VIX, so long now we are below this triangle, we are still safe to hold. We are still safe to hold our what? Our cells. We are still safe to hold ourselves. So, that is where now the concept of peaceful trading comes in, because right now you know that this triangle is your guardian angel. So long I'm below, so long price is below this triangle, I won't even shake or be scared or whatever, because I'm still safe in my positions. I can still hold longer based on this triangle only. So yeah, so that's how you go about these things. That's how you maneuver through these things. So they kindly expect a rejection, then a continuation to the downside, because this is a descending triangle as we've shown you in the morning. So broken for the first time, broken and retested, second retest there, first and second retest. So it's sort of like also a double top, left top, right top. That's a double top. comes, it might come and even respect here and not even come all the way there. That can even happen. So that is how you analyze, that is how you manage your trade now. That is how you do what is called trade management after entering. You don't just sit back and fold your hands and say, let the market move. Move what? Can you just go back and watch what will be happening to see if ever you're still safe, if it's still safe to hold? Is it still safe to hold, or maybe somehow it might not hold that longer that you're expecting? You understand? Yeah, so that's part of trade management. It's called trade management. So that's it. So long we're still below this triangle, we are still okay, we're still fine with our with our sales. So now once price gets to this zone here, once price gets to this zone, just look at price, how it's going to react and respond. If ever it rejects here, it can go up. If it doesn't do that, if it decides not to respect there, once it breaks, you simply shift your stop losses just above the zone here. Then you simply watch how price will unfold. But once it gets there, I'm expecting a certain reaction to the upside. So that's where you also need to most probably consider taking some, if not all, of your profits. So there we are on the trend line. Or what you just need to do is to wait for price to evolve, because here what it can do, it can even come, then come back down. That can happen. So simply wait for the rejection. Once you get the rejection, you can enter. You enter, unless you enter. That's the best time to enter is always after the confirmation, not without confirmations. Always to wait for the confirmation. So this one is $5. It's $5. If you ever would place it here, $7 with the minimum lot size above the triangle. That's $7. The risk. So the reward will be something like $40 with the minimum lot size. Just that one. So we simply now wait now and see pricing, how price is going to respond there. Then we enter. Unless you just want to be a risk taker. If you want to be a risk taker, you can even enter now. Your stop loss above the triangle, like what I've done. Your stop loss above the triangle. Your stop loss above the triangle, which is, this is $6 the minimum lot size. So meaning the 0.002, that's $12. If you just want to be a risk taker and enter earlier, you can do that. It's allowed. It is allowed. Yes, it's allowed. I know you want these earlier entries. You're allowed. You are not restricted. So long you know where your stop loss and whatever is, you are safe. So that's it. That's it. I just want to. So once price gets here, I don't know. Are you going to be sleeping or what? Because you don't want to give back such good amounts of money. Because I think once it gets here, I think you'll be somewhere around 200 something. 200 something, if not 250. If not 250, somewhere there, 250 to, yeah, somewhere there. I think that's where you will be, according to what.
But you see, like on my analysis, there's a key level there.
Where?
Between these two, between your level and where it is right now, there's a key level using the higher time frame.
Okay. So
Yeah.
I think it's going to bounce there. And it would come back
That's
all the
what I
way. Which higher time frame I use?
use check on the daily.
Right. The level that you're talking about. Where is it? Are you talking about this area?
No.
Which area
No.
now? Which area are you talking about?
I know. You see, yeah, that one you might as a on the gray there. Especially if you trace it back all the way there. It's actually a key level, that one.
This one.
Mm.
Because this one, Pela,
Especially,
this was a lower high. Lower high, then lower here. Broken. It was broken here. Broken. Came back for a retest. Most probably coming back again there. So that is why I said this area, it's a key area because it can come there, then maybe go back up and come maybe somewhere here and make a right shoulder, then most probably come back down again. So that it's a very key sensitive area, that one. Key area, this one. Once price gets there, you need to make sure that you secure whatever you might have been given. You need to make sure that you secure the bank.
yeah.
Yes, you need to secure the bank. So on the 4-hour, you can actually see that this move, it might actually be simply a retest now to the triangle. Broke out, retest. So this bullish candle is a retest on the 4-hour. Retest, then boom, then we continue all the way to the area where we're expecting. So it might simply be a retest on the 4-hour, because there's all the smaller time frames, if you check, they retested, but the 4-hour never retested. So it also has to retest as well. So the retest of the 4-hour, you realize that on the 1 hour, it might be a second retest. On 30 minutes, it might actually be a fourth or whatever. So time frames, they differ in that way. Time frames, they differ in that way, whereby they actually have to, the higher time frame has to do the same thing that the smaller time frames did. To come back and retest, it also has to come back and retest. So that is it for the VIX. Any questions, any opinions, any comments?
Here we just have to set our stop loss on the key level there. But it tried to break it.
Where? Hey, what are you using here? Are you using hope?
I think
You want it to break, you know, to think.
I think
You don't think, you want it to break. You want it to break. And it won't break. You see it not breaking. So I'm in already. The other cells. The other cells.
Yes, I'm in.
Okay, powerful. So that is it, vegetarians. That is how we scale in. That is how we trade, basically. that is how we trade, vegetarians. We don't just enter, we don't just come out, we don't just enter, we don't just come out. We'll follow principles, we are calm, we are relaxed. We look at a lot of things before even entering. You understand? So this is the same way that we do even without you guys. This is what we do, even behind the scenes. This is what we will be looking at. These are the things that we will be looking at. So that is how you trade. That is how you manage your trade. That is how you look at areas to scale in your positions. That is how you basically, that is how you do things basically. That is how you do things here in trading. That is how you basically do things. So us doing this, it's all in the name of love, honestly. If ever it wasn't for the sake of love, I don't think you would be wasting our time here. So everything is all in the name of love. That is why we always encourage you guys to spread the word, spread the gospel, and invite others and let them be part of this amazing, amazing thing. Because at the end of the day, if ever we are 100 or we are 200 and we are all making money at the same time, isn't that more wonderful than just the 3 of us or the 4 of us? You get my point?
Yeah, it's powerful.
Yes, so that is what we want. That is what we want. Let's have more people. Already the free, those students who joined for the free classes, they're increasing bit by bit. They are somewhere they are, I think they are now close to 35. Yeah, 35. So very soon they will come and join you guys in this other group. You actually see them coming. They'll only come to join you once I have cooked them very well. That's when they're going to. Yes. So I need to cook them first. Once I cook them well, and I know that they are now ready now, that's when they will join you guys. And you see wonders. You see, that's where you see that other people, they have programs already that are okay. You understand? Yeah. So yeah, that is it, Mr. T. That is it. Just be calm, just maintain your risk management, maintain those things. Because imagine, you know, the danger of not applying proper risk management. Let's say here on this entry point that we took here, someone who doesn't apply risk management, let's say they applied the wrong lot size there. Wrong lot size, they enter. Then there's just a little bit of drawdown. So this small drawdown for someone who used a lot size that they mustn't use, it would take a whole chunk from their account. Then imagine all the way the market comes and goes all the way, the same way you were expecting. Imagine how painful is that. Say, the market went all the way exactly as I was expecting. It went all the way, but you are no longer in because of your recklessness and your indiscipline to not follow principles of applying proper risk management. You see now, you miss out on all this simply by not applying proper risk management. So risk management, it's actually a skill as well. It's part of the skill. It's part of the skill. In the long run, you actually realize that it's something that you need. It's a need. You need to have it. So that is it. That is it, guys, for the VIX. I just wanted to show you this entry so that maybe you don't enter it wrongly or you don't miss it. So they in stop loss above the triangle, just like that. Stop loss above the triangle there, in there. So yeah, that's it. That's it. So now we now wait now. This area here, just watch out for this area. Watch out for this area. Watch out for this area. Once we get there, make sure that you secure. You secure. You just be shifting your stop losses lower, lower, lower. So that's it. That's it. That's it. That's it. That is it. That is it. That is it. So I hope you are in. I hope you are in. I hope you are in.
Yeah.
So that's it, my friend. No need to shake or no need to panic. That is how we do things. That is how things are done. That is how money is made.
Yeah. Let's see how it goes there.
Yeah, that is how things are done, my guy. That's how things are done. So we just now wait and see. We just now wait and observe. Observe the response of price. Yes. So that's it, Mr. T. We'll talk. We'll just be updating each other in the groups.
Yeah.